Corporate income taxes, your complete guide, including S Corp. Ever wondered what exactly are corporate tax forms, tax rates, and tax filing information? If yes, then watch this video. Packed with the latest information about IRS guidelines, this program explains all the key data you need to know about the fiscal responsibilities of S corporations and C corporations in the United States. Tune in now. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as fantastic as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about corporate income taxes, and I'm giving you a complete tutorial here, gonna help you understand the subtleties of C corporations and S corporations when it comes to taxes. Let's talk about U.S. corporations and income taxes. Now, I want to give you great pieces of information to help you prepare for corporate taxes, including types of corporations and how they are taxed, when and where to file, which form to use, and most important, estimating corporate taxes. U.S. corporations are kind of complex entities if you think about it, and taxes for corporations are even more complex. Corporations are a special kind of business because, unlike other businesses, I'm talking about LLCs, partnerships, and sole proprietorships, corporations are a separately tax-paying entity, right? So corporations are owned by what? Their shareholders, also called stockholders. The corporation pays taxes on earned income and then is taxed to shareholders on dividends they receive. That's the concept of double taxation. In the United States, there are two basic types of corporations. You have the C corporation, usually called just corporation simply, and S corporations for the section of the Internal Revenue Code that applies to this business type. Both types have the same basic structure. Ultimately, when you analyze them, they have the same basic structure. So they use articles of incorporation to incorporate within a specific state or states. Yeah, it is possible for an S Corp or C Corp to incorporate in more than one state. Both type of corporations have corporate bylaws and a corporate board of directors. An S Corp is created first as a corporation and then files to elect S corporation status. Now the fundamental difference between a corporation and an S corporation comes in the way they are taxed. Now, let's talk about the differences here. Corporate tax rate and other new changes. Now, in 2017, there was a seminal piece of law that went into effect, and that law basically affected thousands of S Corp and C Corps in the United States. The 2017 Tax Cuts and Jobs Act has made some changes that affect corporations and S corporations. The biggest change, for that matter, was the elimination of the tax schedule and a new flat corporate income tax rate of 21% of corporate net income. Before, the business sector was a little complaining about the fact that the United States was not an investor-friendly state, investor-friendly country, because we had corporate income tax rates going all the way to 35%. So the change in the corporate tax rate does not affect S corporations because the owners of an S corporation are taxed through their personal tax returns. This is something that you have to understand. The C Corp, they were taxed at the corporation level, and the shareholders have to pay taxes on their dividends. Whereas for an S Corp, they're only taxed at the 1040 level, at the personal tax return level. Now, other changes, both benefits and drawbacks affecting corporations, detailed in this article about the Trump tax cuts. Let's talk about. You have increased depreciation expense deduction. Wall Street loved that particular item. More businesses can use cash accounting. As you know, when it comes to accounting, you can have accrual accounting and cash accounting. So the law made it a lot easier for a lot of businesses to use cash accounting. Lower interest rate deduction for larger businesses. You have meal expense deductions limited and entertainment expenses limited, eliminated, by the way. So let me repeat that. So you have meal expense deductions limited and entertainment expenses eliminated. Most commuting expense deductions for employers eliminated. Now, we are currently in a global pandemic, global healthcare crisis, if you will. So you have some kind of coronavirus relief measures for corporations. Corporations that are affected by COVID-19 in 2020 can take advantage of several new tax credits, including an employee retention credit that encourages businesses to keep employees on their payroll, and emergency paid sick leave and family medical leave tax credit for companies that must pay sick leave and family leave benefits to employees affected by the virus. So both types of credit end on December 31st, 2020, unless they are extended. Let me repeat that. So the two types of credit I just talked about expire at the end of 2020, unless Congress does something else and extends it. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. I'm just still, very passionate about the subject, and I'm still talking to you about corporate income taxes. Specifically, we're talking about S corporation and C corporation. Let's talk about tax return due dates. For corporate tax returns, the IRS extended all tax deadlines for 2019 federal income taxes to July 15th, including corporation tax return due on April 15, 2020. For corporation with a December 31st year end, the tax return is due on April 15th. For a corporation with a fiscal year other than December 31st, the tax return is due on the 15th day of the fourth month after year end. So, for example, if you elect to have your business and its fiscal year on January 31st, your company's tax return will be due on May 15th. Let's talk about S corporations tax returns. Now, S corporations must usually take a calendar year end date, December 31st, to coincide with a personal tax year end, unless the corporation can establish a reasonable business purpose for a different date. The filing date and tax return due date are the 15th day of the third month after the tax year end. So that translates into March 15th for almost all S corporations. Now, when it comes to corporations and S corporation tax forms, corporations file their taxes on Form 1120. We all know that. S corporations file their federal income taxes using Form 1120S. The S stands for the S corporation. S corporation shareholders report their share of corporate income or loss on a Schedule K1, shareholders' share of income, deductions, and credit. How do you actually file this? You can file your corporate or S corporation tax return by mail, or you can have your tax preparer e-file the return. Certain corporations with assets over $10 or $15 million or more that file at least 250 returns a year must e-file. The IRS is really trying to streamline the whole filing process. So if you are in a position where your company files a lot of returns, 250 at least, you want to e-file. Now, if you have more information, you can go on the IRS website, www.irs.gov, to learn more. And you just got to click on the Form 1120 and all the instructions are there. Before you prepare your tax return, you got to understand here, you got to collect and gather some paperwork. Why? To file your corporate tax, your corporate income taxes, or S corporation income taxes. By the way, when I say corporate, I'm talking about C corporation, right? So if I say to file your corporate or S corporation income taxes, what I really mean is to file your C corporation or S corporation income taxes, you'll need to provide some kind of financial report and other documents to your tax preparer. Now, when it comes to the Form 1120, you gotta have 1120C or 1120S. You gotta have the financial statements of your business. By financial statements, I'm talking about the 4 fundamental financial documents: balance sheet, income statement, statement of cash flow, and owner's equity. Now let's talk about estimated taxes, amended tax returns, and extension applications. Paying corporation estimated taxes. Corporation must pay estimated taxes if their expected bill is $500 or more. That's the threshold, folks. $500. If you expect to pay more than that, you have to pay estimated taxes. Corporations calculate and file estimated taxes on IRS Form 1120W. The installments generally are due by the 15th day of the 4th, 6th, 9th, and 12th months of the tax year. For a December 31st corporation, that will be April 15th, June 15th, September 15th, and December 15th. When it comes to filing an amended corporate return, corporations must file an amended corporate tax return on Form 1120X. Remember, for individuals, it's 1040X. So for corporations, it's 1120X. Applying for a corporate tax return extension. Corporation receive automatic approval on extension applications, but you must file the application using Form 7004. This form must be filed by the due date of your corporate tax return, and you must pay taxes by this date. So whatever taxes you owe at that particular time, you got to pay taxes, and this is the law. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are still enjoying this content. We just we love talking about helping small businesses be compliant with the law. And I want to say, if you appreciate the quality and the clarity of the content so far, and you want to be part of our community, please subscribe to our channel and turn on the notification bell, and so that we can inform you, or the platform where you listen to us can inform you ASAP whenever we drop a new show. And we release shows every single day, rain or shine. Also, comment below, share, and like this content. If you have questions about corporate taxes in the United States, please drop the questions in the comment section, and our team, one of our team members, will certainly get back to you. We'll read all comments, and we answer every comment, every question. Let's talk now about state corporate taxes. In addition to federal income taxes, you must pay income taxes in the state or states. Remember, for a corporation, you can incorporate, if you will, in 1 or 2 or 3 or 4 or several states. So you must pay taxes, income taxes, in the state or states where your business is incorporated, if those states have corporate taxes. To find out more about your state corporate tax rate and filing instruction, you gotta go to the website of your state tax authority, the State Department of Revenue, or similar department. Now, when it comes to getting help with corporate income taxes, not everybody is fiscally savvy, and we understand that, and the IRS understand that. Income taxes for corporations and S corporations are complicated. They can be complicated. There are a lot of stuff. There's a lot of laws to know. So it's usually best to get the help of a CPA or tax professional who is familiar with corporate taxes, rather than attempting to prepare this return on your own, right? So before you hire a CPA, by the way, CPA stands for Certified Public Accountant. So before you hire a CPA, enrolled agent, or another qualified tax preparer to prepare your corporation's taxes, make sure you review basic information about corporate taxes you should know. And a lot of the material that I'm giving you today, basically, there is more info, more details available on the IRS website. Again, www.irs.gov. And you just got to go to the Form 1120 for corporations and get all the data. All right. Thank you so much for listening to this conversation. I really appreciate it. Let's do a recap here of this quick tutorial. I spoke to you about U.S. corporations and income taxes. New tax law changes for corporations. Corporate tax return due dates. I also talk about corporations and S-corporation tax forms. I talk to you what you need to do before you prepare your tax return, estimated, amended, extended taxes, and state corporate taxes. Thank you so much for listening to this conversation. I will see you next time. But before then, remember, stay marvelous.